We will now move on to the next problem in debentures. On 1st January, Rama Limited listed company had 500 debentures of 100 each outstanding in its books, carrying interest at 6% per annum. In accordance with the regulatory requirements, the directors of the company acquired debentures from the open market for immediate cancellation as follows. So this is a redemption by purchasing in the open market. So they are purchasing in the open market and they are cancelling it immediately. March 1st, rupees 5,000 of face value at 98 cum interest. August 1st, rupees 10,000 worth of debentures at face value 100.25 cum interest. December 15th, rupees 2,500 face value at 98.5 x interest. Debenture interest is payable half yearly on 30th of June and 31st December. Show ledger accounts of debentures and debenture interest for the full year by splitting in the first and second half year, ignoring income tax. So we need to actually open a ledger account in two phases, one for the first 6 months period and then for the next 6 months period. Okay, so they are asking debenture account as well as debenture interest account. So what we will do, we will open one ledger account which will contain both the debenture interest as well as the debenture, right? So let's look at this. 6% debentures account. Debenture interest dates are 30th June and 31st December given to us in the problem. So we will do first for the first half year. Look at the columns: date, particulars, number of debentures, interest and amount. This is where the interest account is, the interest amounts are getting captured here. So we are not going to open a separate ledger account for interest. Rather, we are going to have the interest as a sub column within the debentures account itself. Then amount. Same on the credit side, date, particulars, number of debentures, interest and amount. Now, what is the first thing? January 1st, that's the start. What is the opening balance? We had, I think, 500 debentures, correct? We had 500 debentures. Am I right? We had 500 at rupees, 100 rupees each outstanding, right, on 1st of Jan. So we will say it is 50,000. That is the total value of the debentures outstanding on 1st of January. Okay. Now what is happening? March 1st, we are actually purchasing in the open market rupees 5,000 worth of debentures at face value, 98 rupees cum interest. What is, when I say cum interest, it is including interest. Okay, so if I look at the number of debentures, the face value is 100 rupees per debenture, right? So when I say rupees 5,000, which means it means 50 debentures I'm actually buying back. I'm actually buying back 50 debentures. I have 500 debentures, but out of that 50 debentures on March 1st, I'm actually purchasing it in the open market for the purpose of cancellation. Now, very important. How much am I paying for that? That is important. I am paying 98 including interest. So if I do a small calculation here, 50 debentures I am purchasing, and if I'm going to pay 98, right? So which is 50 into 98, total amount I'm paying is 4,900. Total amount, which means both the amount for the principal and interest all put together is 4,900. That's the bank amount which I'm going to spend. Out of which, how much is interest? Because look at the interest dates. I would have got debentures, I would have paid debentures, the interest on those debentures till 31st of December, which means I need to pay when I am purchasing the debentures in the open market. That the debenture interest is already accrued for 2 months, January and February, correct? So we need to pay interest for those 2 months. So the face value of the debenture is what? 5,000. Am I right? Right? So 5,000 is the face value of the debenture. Please calculate 6% interest for 2 months, 2 by 12, that will be 50 rupees, which means when I'm going to pay, when I'm going to purchase in the open market, 50 rupees is the debenture interest and balance 4,850 will be the principal portion. So the total amount which I spend is 4,900. There is no second opinion on that, right? Look at this, 50 into 98. I am purchasing 50 debentures in the open market. I am paying 98 rupees, which is cum interest, including interest. So the total amount which I spend is 4,900. But what is the breakup, internal breakup? 50 rupees is towards interest and 4,850 towards the principal portion. How did I calculate 50? Because it is 2 months interest. 2 months interest has already been accrued. The last date was 31st December when the interest was last paid. Now January, February, the interest would have been accrued. So we need to pay the interest on those debentures which are actually being purchased in the market. Right? That is the first thing. Now, once you have purchased in the market, we need to cancel it, right? When I cancel it, what is the profit I'm going to get on cancellation? 150 rupees is the profit which I'm going to get, because, right, I am cancelling a 5,000 face value worth of debenture, right, by purchasing in the market, and I'm paying only 4,850 against that, which means 150 is a straight profit for me. So I credit the profit on cancellation of debentures 150 rupees. This is exactly what you see in the working note number 1 and working note number 2, which I've already worked out. But anyway, I'm going to showcase this. Look at this. Working note number 1 is that 50 rupees working. How did we get that 2 months interest at 50? That is one. Working note number 2, right? How did I get that 150, which is the profit on cancellation of debentures? It is difference between 5,000 and 4,850, which is 150. Right? Okay. Now, let's go to the next date, which is June 30. Right? June 30, I have to pay interest to the debenture holder. Correct? Out of 4, I have 500 debentures, but I have already purchased 50 debentures, which means interest is due on how many debentures? 450 debentures, interest is due. What is the interest amount which is due on the 450 debentures? Let's calculate. 450 into face value is 100 into 6% for how many months? 6 months into 6 by 12. You'll get 1350. 1350 will be the debenture interest which is due for the remaining debentures. Make sense? So how did we calculate? It's there. We had 500 debentures. We purchased already 50. So remaining is 450. We need to pay interest on those 450 debentures. So 450 into 100 face value into 6% into 6 months. So that will give you 1,350. Once you have done that, that marks the end of the first half year. Now look at the balance of debentures with you. You had 500 debentures. You purchased 50 debentures, which will leave you with a balance of 450 debentures. Right? What is the total of the balance of the amount column? 50,000 is a total value, right? Minus 5,000. This will be 45,000. It's actually 450 into 100. That will be 45,000. Right? Whatever is the balance you have in the interest column, 1,400, you will transfer it to P&L account, 1,400. Right? That marks the end of the first half year. Let's also rework let's go and check the working note number 3, the 1350. How did we calculate that? That is the third working note for your reference. Remember this? 450 debentures into 100 into 6% into 6 by 12, that will give you 1,350. Right? So this is the working for the first half year, because we have a specific instruction and direction in the problem. You need to split into 2 halves. Have separate ledger account for the first half year and then for the second half year. I hope it is very clear. Okay. Now we will move on to the second half year. So again, we'll have a separate column for that. 6% debentures account. Debenture interest dates are 30th June and 30th December. What is the opening balance? Whatever is the closing balance of the 30th June, which is 450 debentures and 45,000, that will be the opening balance here. Auto carryover that we have done. Now, what is the next transaction? So we are done with this. So now let's focus only on the next transactions in the second half. August 1st, you are actually purchasing rupees 10,000 face value at 100.25 come interest. Okay, so when I say you are purchasing 100 debentures actually, right? When I say rupees 10,000, it is actually in terms of the number of debentures, it is 100 debentures you are purchasing. How much you are paying? 100.25, which means 100 into 100.25 is the total price. So we are actually spending 10,025. The total amount which is paid is 10,025. Now the point is, this is come interest. This includes the interest as well. So we need to segregate the interest portion. So what is the interest portion? That we need to say. 30th June was the last date of the interest. Now we are in August. So July is 1. So 1 month interest would have accrued. So we need to calculate the 1 month interest. So please calculate. So it is 100 debentures into face value 100 into 6%. And if I do it for 1 month, how much will I get? 50 rupees, which means if I put 50 rupees in the interest column, the balance 9,975, that will be the amount column. So the total amount which I paid is 10,025, but the breakup is 50 rupees towards interest and 9,975 is towards the principal portion of the debenture. Okay, and now I'm going to cancel. Once I purchase in the open market, immediate cancelling the debentures, obviously I'm going to have a profit of 25. Correct? Because I am cancelling 10,000 worth of debentures by actually paying only 9,975. So thereby I gain 25 rupees in the process. Okay, now let's look at these two working notes just to confirm that our understanding is right. Working note number 4 and working note number 5. Working note number 4 will be for the 50 rupees interest on debentures, and working note number 5 will be for the profit on cancelled debentures. Let's look at working note number 4 and number 5. Look at this. Working note number 4 is going to be that 50 rupees interest. How did we calculate for that 1 month interest? And working note number 5 will be that profit on cancellation debentures. So we are actually paying only 9,975 to cancel a 10,000 rupee debenture. So in the process, we gain rupees 25. So I hope it is clear. Okay. Now that is done. Now please look at the next working. Next date, after August 1st, we are actually purchasing on December 15. But this time it is not come interest, it is excluding interest. Right? So we need to calculate interest separately and put it in the interest column. Unlike in the earlier sums where we had earlier situations, it was come interest, so we actually deducted the interest. But now there is no need to deduct interest because the amount given is excluding interest only. So it is actually 225 debentures into 98.5. So December 15, you are actually purchasing 25 debentures. What is the amount you are paying? 25 into 98.5. So it is 2,462.5. That is the value which you pay. This is excluding interest. So we need to calculate the interest component also. When are we purchasing it? December 15, which means 5.5 months. Right? July, August, September, October, November, and December 15 days. So 5.5 months the interest is accrued. So can we calculate 2,500 into 6% into 5.5 by 12, that will give you 68.75 is the total interest. 68.75 is the total interest. Right? That is working note number 6. And working note number 7 is very simple. Again, we are going to cancel. We are actually cancelling 2,500 worth of liability against 2,462.5. So we are actually gaining 37.5 in the process. Okay, so that is working note number 6 and 7 for our reference. Kindly let's go down and let's see the working note number 6 and 7. Working note number 6 is 68.75. What is the interest which we pay? The 5.5 months interest which got accrued. And working note number 7 is the profit on cancellation of debentures 37.5. The last bit is the final one is the debenture holders. 31st December, we need to pay debenture holders the remaining interest, right? Now, please look at the opening. You started with 450 worth of debentures in the second half. We've actually purchased 125 worth of debentures. So the remaining debentures is going to be 325. The remaining debentures is 325, correct. So what is the debenture interest accrued for that? 325,000 into 6% into 6 by 12. That will give me 975. 975 is the total debenture interest which is payable. So we will debit the interest column, right? And final balance is going to be here 32,500. And so the total interest which gets transferred to P&L account is 1,093.75. 1,093.75. Okay. So that is working note number 8. Let's look at working note number. Let's look at working note number 8. You will get 975. 325 debentures into 100 into 6% into 6 by 12. That will give you 975. Right? So we have actually covered all the 8 working notes. I have actually showed you the working also. So this marks the end of the problem. So you need to, it's a good problem because you have both cum interest and ex interest, and you need to prepare the ledger accounts in two separate sections, one for the first half and next for the second half. It's pretty interesting problem. So I hope it is very clear now.